Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. Today I'm going to be talking to you about a not so sexy topic, but it comes up all the time, is divorce, right? What does that look like with a spouse when you own multiple properties? So of course, I do encourage you to seek legal advice, and I'm just speaking to you from someone who's seen it with clients and just some of the challenges and things that they go through, and sort of like, did you knows and that type of thing. So in Canada currently, the divorce rate is approximately 40%. This was based on the research that I could find online. And I think that that's pretty accurate based on, the clients that we work with, and, we help them buy XYZ property and then they're splitting up. So it happens, right? But we want to know how to protect yourself and what to do, and more of a did you know, right? That's what this is about, just to educate you so you can work this out. So the thing with most provinces in Canada, so I'm not going to dive into province by province. So this is why it's always, you always want to speak to an expert. But from everything that we've researched and know, most provinces have, an equalization for real estate. So meaning, if you own real estate and you're married and you split up, you have to owe the X. Now, there's challenges to that, right? Like if it was you and your ex that bought the property together, great. I mean, that makes a lot of sense, right? You'll sell them or you buy them out and we're good to go. But where it gets messy is if you have partners involved, right? So these are things, I'm not going to necessarily in this episode tell you how to do it again, because I am not a legal expert, but what I am going to do is create that awareness for you so you know things to look for and what to talk about and what to work out before you get into these scenarios. But what if you've JV partnered with somebody, right? And then a split up happens, right? Like that is a problem. Another thing that's very, very challenging is mortgage qualification. So in Canada, when the lenders hear that you're getting a divorce, they require a separation agreement. Now, in lieu of, we've been able to get them to accept sort of an affidavit from your lawyer that you sign and your spouse signs, just stating who gets what and if any child support or alimony or whatever is going to be paid. Like you guys have worked all of that out, because they do factor in those payments into your debt ratios. So say, you bought the home together, fantastic, but now you want to take over the loan. Well, if you're paying $2,000 a month in alimony or child support or whatever, that looks like a debt on your application now, right? So if it looks like a divorce or a split up, they won't move forward. We've even seen it where, say there was, and sorry, this is going back to the banks and lenders are actively looking for this. They're very, very careful with this. So we've seen it where clients, maybe the husband and wife, maybe one of them has not the best credit, or they want to free up income, like they're free up their debt to income ratio so they can buy other stuff. Because we do see that. We see some couples trying to buy separately so they can maximize the amount of properties that they can get before they start getting into fees and stuff like that. If a lender knows that you're married but only sees one spouse on the deal, it's a red flag. And they think, oh my God, there's a divorce, something's happening. Like they want to know more. So, and some of them don't even care. We had a deal with the bank and they're like, we don't care. Add the spouse or we're not moving forward. Like that is how adamant they were, because they didn't want to risk that there was some type of extra support or alimony payments needed, and they didn't want to hinder their loan repayment ability. So these are all things to be aware of, right? These things are terrible. So if you are getting a separation, work out between yourselves who's entitled to what as soon as possible, because it will help the other person. So let's just say, we'll go back to that scenario, and we're going to say that you have to pay your spouse $2,000 a month. Let's just pretend. Well, now your spouse can use that $2,000 to help him or her to qualify for whatever they need too, right? And without that, the lenders won't move forward. So you just want to keep that in mind and be careful. Another thing to be aware of is properties that you've owned prior to the marriage could still be partially subject and exposed to your spouse getting some of that equity or some of it, even if they've never made any mortgage payments. So there's agreements that you can have in place. There's prenups, there's other things. This is why you need to speak to your lawyer. Again, this episode's about awareness. So look into these things and see, what can happen. So you minimize these challenges. So I'm just going through some of my notes here because I have a bunch of different scenarios. But what a lot of investors are doing, or the savvy ones, is we're seeing a cohabitation agreement or marriage contract where it does outline, like, this was my assets before, and it protects both parties. Because say the wife is coming and, she received a $500,000 inheritance, and then the husband has, an existing property that could be worth a few $100,000, right? By having this agreement, it does protect each other from the assets. And it really sucks that 40% of marriages end in divorce, right? Like, that's massive, almost half. So, take things a little bit slow too. Don't just dive in. So one other thing to keep in mind here too, another tip, is corporately held properties. They can be reviewed differently. Okay, so keep that in mind. You want to speak to your lawyer and accountant, but they are processed potentially differently, giving maybe some advantageous benefits to you, especially if you owned it before, right? That does kind of help protect you. But yeah, you just want to think of these things, not that you're going to be failing. And I know a lot of couples, because I've had this conversation with friends and stuff, and they're like, oh, my wife would have never agreed upon that, blah, blah, blah. I think if you bring it up, right? Like, if you don't talk about before you get married, right? Dividing up your assets and keeping them separate, and then you get married and you try to talk about it, or you're about to get married and talk about it, that is the wrong time. I think if you're getting into this and you start dating somebody and you have assets, you just need to say, hey, look, I have these assets, and, obviously I'm interested in moving forward with you. We're going to see how this goes, but I want to make sure that these assets are protected and kept, outside of any relationship. And when you say it early, when there's just that initial connection, it's generally no problem. But when you bring it up too late in the game, then they're going to be like, oh, you don't trust me? What's going on? So keep that in mind. Another major thing that I would say is I would try to always agree on everything internally with you and your spouse if you are splitting up as to who gets what. Because if you get this to a divorce lawyer who's going to, divide up all the assets and fight back and forth, you're going to be paying thousands and thousands and thousands of dollars of legal fees. And it might even work out worse for you. Things that you could have, held on to, received, kept, whatever. It might be something that now your spouse gets because the lawyer thought of it and wanted to demand it, right? So it's always best that you and your spouse, if possible, right, if the breakup is something where you're still in communication, where you can negotiate these assets and split it, internally yourself. And then you can have an affidavit signed, again, at the lawyer. Those are like a couple $100. And then that you then give to the divorce lawyer. They don't have to do the fighting and back and forth. That's where the big money comes in. And then they finalize it for you and you're good to go. So that is a much better way that a lot of couples don't think of right away. They're like, oh, well, let's talk to a divorce lawyer. I don't think couples realize how much power that they have amongst themselves to agree on everything and then just finalize their internal agreements. Obviously, if you guys are fighting and it's a battle and challenge, that's a different story. You've got to go, through this journey. But I do want to share these things too, because we've also seen it where, the spouse was supposed to take care of XYZ mortgage payments, and I'm supposed to take care of these payments over here, and the spouse wasn't keeping up those mortgage payments, but you're attached to the loan and it's ruining your credit. So what I do encourage you to do is, if you are separating assets and a spouse is going to be carrying the debts for you, you just want to make sure that they get everything in their name as soon as possible. And they may not be able to, right? They may not actually qualify because maybe your income was needed, or again, the rental property. Like it could be whatever the case may be. But the point is whatever debts and liabilities, you want to separate them as soon as possible, because you don't know what their payment history is going to be, and you don't want your credit ruined because of somebody else. It's the worst. Like, we see it a lot, actually. That's probably the number one thing that I see, is late payments on credit. And you never know, because people will say whatever, but when they come in the door, they say, hey, that was from my spouse. Maybe half the time it was, maybe half the time it wasn't. I don't really know. But the point is that comes up a lot. So I just want you to consider these things. Again, I think open communication and speaking to a potential partner up front is super important, because if you lay the guidelines out before things get too serious, it's not going to really affect you. And the goal of this is, so when you're listening to this, you think of these things as you enter relationships and move forward. But let's say you're married, right? If you're married and you're buying a property with a partner, you should speak to your wife about some kind of arrangement, right? You should be like, hey, like, we're doing this, but how can we protect this if we don't get along, or if their spouse doesn't get along? Because it goes both ways. You don't want your partner to come to you and be like, oh, we have all these problems now because, I'm breaking up with whoever, right? So you want to have that conversation as a couple so that it minimizes the potential damages. Absolutely. So, because the last thing you want to do is sell when it's not the time to sell. We all know from investing, real estate is like a roller coaster. It has its ups and downs. In every stage and every part of this roller coaster, you can make money. It doesn't matter if real estate's down or real estate's up. What you do is your plan. It's your plan that changes. And that's how you maximize and create income or equity in different market scenarios. So I hope this helps, and I hope it gives you some thoughts and things to think of as you enter these relationships. But nobody likes to talk and work on the hard stuff, and this is one of those things where it is hard to have these conversations, but it's super important to have them. And if a problem comes up and you've prepared yourself and you've lined everything up properly, it's going to be smooth sailing for the most part. And you're going to be so glad that you took the time and the inconvenience and, the feeling of not wanting to do it, or, the stress of it or anxiety of it, and the fact that you did all of this up front. It's going to make things a lot easier for you down the road. So anyways, I hope this was helpful. I hope you liked it. Thank you so much for listening to the show. Please like, share, all that good stuff, and I'll see you next week.